Hi, everyone, and welcome to this presentation on analytics and technology trends in banking. I've taken up some information from the Capgemini Retail Banking Report 2023 and 2022 for this presentation. And I do believe that if you are somebody who's in the mid or senior management in a bank, a financial institution, any lending organization, then this presentation should help you. If you're thinking about who is us in the content team. It's me, Subhashini, and Shreya, who generally sits under my table as I create content. What we are seeing is that there is a boom in synthetic data that will catalyze data ecosystem growth because the customers are looking at integrated experiences, which is just not possible in an industry like banking, where you have access to information on a need to know basis. I think this chart is self-explanatory, but I wanted to tell you a bit more about synthetic data in the next slide. As we know, data is critical to identifying target customers, personalizing the experiences, and nurturing customer relationships. But banks wrestle with data quality, structure, and availability to unlock their full potential, which means that be it an employee, a customer, or a vendor, if they need a status, they often have to knock or talk to at least 2 to 3 people to get a outcome. So the new term that I would want you to remember if you are preparing for an interview or looking at a promotion is the word synthetic data. Despite the vast amount of data produced, much of it is still inaccessible for data science and analytics projects because of strict data privacy, security, and compliance guidelines, making assessing and using this real world data sets very challenging. As a result, organizations are turning to what we are calling synthetic data, which is artificially created or generated data, which is created using new and advanced machine learning algorithms to provide an effective and affordable alternative to sensitive and risky real world data. Now, as you can see in the graph here, today's AI, we are still using a lot of real world data and customers are asking for more. They are saying your chatbots are very constrained. We want free flowing conversations. We also want information to come completely on a chatbot and the like. Such demands can only get met in the future with the use of synthetic data, which will actually outrun in volume the real data that is available. Hand-engineered methods involved designing rules and algorithms to generate this synthetic data. And these methods are often used when the underlying data distribution is well understood and can be represented using specific mathematical or statistical models. So you can have rule-based data generation in which, say, you have a data set of sales transactions with customer information. You can generate synthetic data by defining a rule like create new transactions for each customer with random purchase amount and dates, ensuring that the purchase dates are within a reasonable range from the original date. So that's synthetic data. It will give any advisor very clear understanding about the product that the customer has taken from the bank. You can also use parametric models. These are mathematical representations of the data distribution, and synthetic data is generated by sampling from these models. And of course, you have the completely random data that you can use generative AI or AI in general to create for you. So this is one important term. The next very important term and something which is going to be seen more and more is decentralized finance, which refers to blockchain-based financial systems that operate without traditional intermediaries and provide open and accessible financial services. This they do through smart contracts and decentralized protocols. It offers open and permissionless access to various financial services like lending, borrowing, trading, and DeFi emphasizes transparency, security, and user control over assets. This is in contrast with what is generally seen, which is centralized finance and that relies on traditional financial institutions as intermediaries, such as banks and brokerage firms. So while the centralized finance offers familiarity and regulatory oversight, decentralized finance fosters innovation, inclusivity, and disintermediation, allowing users to engage in financial activities without relying on centralized authorities. Now, one question which I find often which is asked is that, is Bitcoin an example of decentralized finance? And the answer is no. It is a decentralized digital currency, but it primarily serves as a store of value and a medium of exchange, while decentralized finance refers to a broader ecosystem of decentralized financial application and services built on blockchain platforms using smart contracts. Right? I do hope you will read up a bit more to understand at your own convenience. Now, when you look at the top retail banking trends in 2023 and their priority matrix, you will see a few trends which are coming out, like financial wellness advice, which can help customers navigate the cost of living challenges. You can see a digital identity to unlock efficiency gains for banks, and a boom in synthetic data to catalyze data ecosystems. Now, all of this will be things which we will be seeing in the future. And the new trends which customers focus on is that customers want a seamless omni-channel experiential journey, smart branches, and the CMO will play a pivotal role in enabling this, the Chief Marketing Officer. So, leading banks will develop capabilities to expand services and come closer to the customers. Now, one great place that banks can look at for some initial understanding is the fintechs. Trends which have evolved from 2022 to 23 include embedded finance. Sustainable business models are critical to retain and expand customers' mind share and share of wallet, while the banks remain cautious about decentralized finance. When you look at some trends which were the buzz in 2022 and today are not the buzz, these include 5G and digital only subsidiaries, which seem to have fallen in grace and now are no longer priorities of the bank. And most banks which had initiated cost transformation and cybersecurity projects are continuing with them, but new initiatives are much less frequent than they were last year. So one thing which you must have caught on would be this, the financial wellness advice, which can help customers navigate cost of living challenges. Now, this again points to chatbots, which should have generative AI capabilities and make it easy for customers to ask banks for recommendations for particular problems in their life, and not just banks pushing to them whatever products that they have. I do hope you get the job that you are aiming for, and do like, subscribe, and share what we bring to you on this channel.